Right now, millions of people in the UK are celebrating a massive illusion. They open their banking apps, look at a 4 or 5% interest rate on their cash savings, and genuinely believe they are winning the financial game. But behind that digital screen, a silent, invisible financial predator is eating their hard-earned wealth alive. That predator is inflation, combined with fiscal drag. When your money sits in a traditional, ordinary savings account, its purchasing power is being systematically reduced year after year. It doesn't send you a notification, it doesn't ask for permission, and it certainly doesn't issue a warning. It simply guarantees that the cash you hold today will buy less tomorrow. Holding your long-term wealth in cash isn't safe. It is a slow, guaranteed subtraction of your absolute net worth. But now, I want you to imagine a completely different reality. Imagine a legitimate, government-approved framework that allows you to build massive equity, collect consistent quarterly cash flow, compound your returns, and construct a life-changing financial portfolio without giving a single penny of your investment profits back to HMRC. This isn't a high-risk legal loophole. It isn't a complex tax avoidance scheme reserved exclusively for multimillionaires, and it isn't a closely guarded secret whispered only in private wealth management offices. It is a stocks and shares ISA. For the average individual living in the United Kingdom, this single account wrapper is arguably the most powerful wealth-building tool you will ever have legal access to. The fundamental mistake most people make is believing that achieving true financial independence requires an astronomical corporate salary. It doesn't. While a high income certainly helps accelerate the process, what matters infinitely more is structural efficiency, how much of your investment growth you actually get to keep. Taxes are the absolute heaviest anchor dragging down long-term financial freedom. Every single pound you surrender to the taxman is a pound that is permanently stripped from your portfolio, meaning it can never compound, never grow, and never work for your future self again. Let us look at the cold, hard mathematics of compounding to see exactly what is at stake. Suppose you commit to investing a disciplined £500 every single month. Not £5,000, not some unrealistic corporate figure, just £500 a month, which is the equivalent of protecting roughly £16 a day from meaningless consumer spending. Now, let us assume your portfolio generates an average annualized return of 8% over the long term, which aligns with historical multi-decade returns of globally diversified equity markets. Naturally, real-world stock markets do not move in a straight line. Values will fluctuate, and there will be years of volatility where values fall as well as rise. But watch what happens when time takes control of the equation. By year 10, your disciplined routine means you have personally contributed a total of £60,000. Thanks to the steady engine of growth, your total portfolio value would stand at approximately £91,000. That means your money has generated over £31,000 in purely passive capital growth while you were sleeping, working, and living your life. If you maintained this exact same pace for 20 years, your personal out-of-pocket contributions total £120,000. However, your total tax-free portfolio value has now ballooned to an astonishing £295,000. Nearly £175,000 of that total wealth is completely free money, generated entirely by investment growth rather than your manual labor. But the true magic occurs when you extend your horizon to 30 years. Over 3 decades, your total cash contributions equal £180,000, but your total portfolio value has now surged to approximately £745,000. More than £500,000 of that staggering balance was not earned by working exhausting extra shifts, it wasn't inherited, and it wasn't won in a lottery. It was generated entirely by the relentless, compounding momentum of time and patience. Now wrap that entire fortune inside an account where HMRC cannot touch a single penny of it, and you suddenly realize why understanding this strategy changes your entire financial trajectory forever. To truly appreciate why a stocks and shares ISA is an absolute necessity for modern wealth creation, we need to strip away the dry, intimidating financial jargon. The financial industry deliberately makes names sound incredibly technical, complicated, and bureaucratic to keep everyday people reliant on expensive advisors. In reality, the concept is beautiful in its simplicity. Think of your investments as an asset you are trying to grow in an environment filled with financial hazards. Now imagine taking those investments and placing them inside a legal, bulletproof vest. That is precisely what a stocks and shares ISA is. When your money is inside this wrapper, the underlying investments behave exactly the same way they would anywhere else. The shares will rise, the index funds will fall, and the market volatility remains identical. However, the moment those investments generate a profit, the tax shield activates. You are not protecting your money from normal market fluctuations. You are protecting it from unnecessary, wealth-destroying taxation. Under the current UK tax rules, every eligible individual receives an annual ISA allowance of up to £20,000 per tax year. You can choose to allocate this allowance across different variations of ISAs, such as a cash ISA or an innovative finance ISA, but your total combined contributions across all accounts cannot cross that £20,000 ceiling within the same tax year. This means you have the right to shield up to £20,000 of fresh capital inside a stocks and shares ISA every single year, allowing that capital to snowball within a completely protected environment. To understand why this wrapper is so vital, let us examine what happens to an investor who operates completely unprotected. Imagine you buy shares in a collection of high-performing global businesses. Over a decade, those businesses expand, innovate, and double in value. If you hold those investments outside of an ISA in what is known as a traditional general investment account, the moment you decide to sell those shares to realize your profit, you smash directly into the capital gains tax wall. Over recent years, the UK government has aggressively slashed the tax-free capital gains allowance down to minimal fractions of what it used to be. Once your capital gains exceed that tiny annual threshold, you are legally obligated to hand over a significant percentage of your investment profits directly to the government, depending completely on your personal income tax band. Inside a stocks and shares ISA, however, qualifying capital gains are entirely exempt from capital gains tax, whether your portfolio grows by £500, £50,000, or £5 million. Every single penny of that growth belongs entirely to you. When you sell an investment inside an ISA, you do not even need to report it to HMRC, and it doesn't even need to be declared on a self-assessment tax return. More of your money stays exactly where it belongs, working for you, generating returns on top of returns, driving the compounding snowball forward. But the tax shield doesn't stop at capital gains. It also completely neutralizes the secondary threat to your wealth, the dividend tax trap. When productive, highly profitable corporations earn a surplus, they frequently distribute a portion of those cash earnings directly back to their loyal shareholders in the form of dividends. If you hold these dividend-paying shares inside a standard general investment account, any dividend income you receive above the heavily restricted annual dividend allowance is hit with dividend tax rates that scale drastically up based on your tax bracket. For higher and additional rate taxpayers, this represents a massive, ongoing drain on their cash flow. Inside the stocks and shares ISA, every single qualifying dividend payment lands in your account completely tax-free. This means the immediate cash flow generated by your investments can be entirely reinvested to purchase more shares, rather than being carved up and redirected to the state. Consider the ultimate real-world comparison between two identical investors, Sarah and James. Both investors possess the exact same amount of initial capital, choose the exact same index funds, experience the exact same market returns, and receive the exact same dividend distributions. The only variable is structure. Sarah utilizes a standard general investment account because she didn't take the time to learn the rules. James utilizes a stocks and shares ISA. In the first year or two, the variance between them appears completely negligible, perhaps a few £100 of tax friction for Sarah. But as the decades roll on, Sarah is forced to constantly pay taxes on her dividends and carefully manage her sales to minimize capital gains exposure, or lose thousands to the state. Meanwhile, James's portfolio grows with absolute friction-free efficiency. Over a 30-year investment horizon, that single structural choice can translate into a difference of tens of thousands of pounds in final net wealth. The ISA didn't magically make James's stocks perform better. It simply removed the structural friction, and in long-term finance, eliminating friction is the ultimate competitive advantage. We have just covered the absolute foundation, the impenetrable tax shield that every single person in the UK must utilize to protect their wealth. But wrapping your money in a stocks and shares ISA is only the first step. The real question is, what exactly do you put inside it to make it grow? In part 2 of this masterclass, dropping in just a couple of days, I am going to reveal the true wealth engines. I will walk you step by step through the index fund revolution, show you exactly how to automate your entire wealth building machine so it takes zero daily effort, and expose the fatal beginner traps that quietly destroy thousands of UK portfolios every single year. You work incredibly hard for your money. Between the rising cost of living, endless bills, and heavy taxes in the UK, you simply cannot afford to let your future slip through your fingers. You deserve a life of absolute financial independence. You deserve a life where your money works for you, not the other way around. If this video opened your eyes and gave you genuine value today, please hit the like button and share this with a friend or family member who needs to hear this truth. And most importantly, subscribe to the channel and turn on the notification bell right now, so you do not miss part 2 of this ultimate blueprint. The journey to your financial freedom has just begun. Stay disciplined, and I will see you in the next video.